Welcome, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. Dow Industrials right now about down 127. You get the NASDAQ's down 30. S&Ps are off 7.5. We have gold down $1.20. Silver's off 31 cents. Let's see. Oil's down 15. You got the bonds, the 10 years up 3 ticks. 30 years down 9 ticks. And good old King Dollar. King Dollar's down 582 ticks at 95.42, and volatility in spades. If you haven't test drove the Nadex platform yet, folks, it couldn't be a better time to do it. Defined risk is what it's all about. You can come over to our website at TFNN. You go to the banner on the top of the side, the Nadex banner. You hit that banner. You can bring up the account. As you bring up the account, you can trade $25,000 in paper money. And, of course, don't forget, our man, Mr. Darrell Martin, has a great show every Wednesday and Thursday. We do the show Friday mornings at 10 a.m. Darrell Martin, what's going on?
How you doing, man?
Hey, how can you not be doing great, man? You talk about volatility.
This NASDAQ looks like it's ready to come on back down off that one deviation bounce.
I like to hear that's a one deviation bounce. It's perfect.
That is cool.
It went down to 43. We had 43.0575 was a one deviation move to the downside.
How cool.
Okay, so like we were just like a point or so off that, right? And a couple points off that, went right down there, ran right back up, and we are back up. You know, really just hit a deviation. We also have a big ice zone right there in volume, right there at 43.62. Which it just bounced off of as well. So you're talking about a deviation and the high volume, basically high volume ice zone from yesterday, and it's bouncing off of that. So we got a lot of things in our favor. Looking for a potential pullback here.
Nice.
It's huge, man. In fact, the open today, folks. Okay, so you get option expiration, right? That open today was the wildest open I've seen. Like,
what do you mean? Just a spike, or how so?
Yeah. So what happened is that the NASDAQ futures were only down like about 20 at 9:30. I put on. I've already closed one of them. Okay,
yeah,
I put on that 10-point spread because I was looking for spreads, and it was kind of hard because the premiums were big. Okay,
it had already come down overnight. That's right. So it was away from the middle.
So what would happen though? This is like sick. So the NASDAQ was already under the 430 level. That's what I did. 4330.
4330.
Yeah, 4330. And it was already under it, but they would give me 4 points, because it was the 11 o'clock one.
I hear you.
It was the 11 o'clock one.
As you're saying this, it's going, but go ahead.
So what ended up happening, right, is I put it on. I just put 5 contracts on, right?
Yep.
I put it on, and the market opened, and the NASDAQ went down another 40 points on the open.
Right.
So I just closed it. It was a 12-minute trade.
Nice.
And then I just that open this morning was insane. You know, this is going to be a nasty day, man.
I was going to say, it's got to be interesting if you have some huge positions to wait out over a weekend after the week we've had.
Oh, yeah.
I mean, anything could happen to either side. There could be a huge jump Monday where you pull back some of those, or it could be, you know, I'm just going to sit out for a little while and just see where this shakes out.
No doubt, no doubt. What I really liked hearing, basically, whether it's, you know, is that you get a down market and yet folks were worried about selling into it. That was music to my ears. No, it was music to my ears, man, because guess what? This thing is only just beginning. And I know it's tough to sell into it, but it's not tough if you've already been shot. That's what it's a different ball game. Do you know what I mean? Because,
like anything else. You know.
Exactly. You know, so it's really intriguing. And what does happen is that you want to, you know, basically protect yourself, that's for sure. But that's easy to do in a market that's this volatile. You know what I mean?
It doesn't seem like a big deal. I think I watched the nightly news, and it was like the 5th or 6th story.
It's crazy.
You know,
no one's scared.
And the top 5 stories were nothing worthwhile. You know, it's just I caught it off guard where I was like, wow, they so casually just mentioned, almost in a comical, not really, but lighthearted way, of that we had, you know, the worst day that we had all year or something. And like, you know, it was just that lighthearted mention of the markets.
Let's just not talk about it.
I mean, it was just that lighthearted, you know, how the nightly news fits in the numbers occasionally, and they almost show it as they go to break sometimes. And it was like, that's how you cover, like, and you lead off with some story that, you know, is not news, whether it was political or I forget what it was. It was so meaningless. You know?
I agree, man. There was a guy on CNBC this morning from the CME, and they were asking, well, what's the feeling down there? And he didn't answer that question. You know what he said? He says, well, listen, you know, market went down, but, you know, you got to think that interest rates are low. Oil's low, You know, you got to think about next week and the week after.
You can always create an argument.
And 6
I can create the argument to buy. Anybody can.
I know.
Right? No, that's what I'm saying. It's like,
but
if you're a day trader, I don't care about next week, man. What about the next 10
Well,
minutes?
that's what was really cool about.
Yeah.
And folks, what happens in markets is that you can get more information about what they don't say. This was a trader at the CME. You don't talk about 3 weeks
Buy
or
and
6
hold.
months from now. Oh, really?
Right.
Yeah.
Like, you're not on the floor trader. Like, I'm just going to put on a position and sit and watch it.
There's value in long-term investments in the stock market. Thank you.
Yeah, right.
Like, why are you at the CME? Like, go over to a brokerage office.
Yeah.
You know, so that NASDAQ, we're down 8 points since you'd even mentioned that, Darrell, coming down.
I know. I've been riding it down here. We've been going. I got in a spread, and now I'm like, oh man, now I'm stuck in premium land. But yeah.
I mean, 60-point swing from the low this morning alone, up, down, and now back down another 25 points. That's 85 points from just the bottom, like 35 minutes ago, up to down.
How heavy is that? I know. Cool. Oh, it's the NASDAQ is jumping around like it's hard to believe that it's that.
You were calling it this morning, like in your pre show segment right there, talking
right.
Like, oh, it's coming down right now, and boom, it turned around like just like minutes after you spoke.
It's crazy, man.
I like to hear that standard deviation when you said that.
I do
standard
too.
Deviation.
I know, man.
I mean,
and
statistics are real, math's real.
Math doesn't lie. Numbers don't lie.
Deviations are, statistical probabilities is almost everything.
Exactly. Well, and if you tie in the big thing about the deviations we use instead of just the standard is we use the implied deviation. So what you're doing is you're tying in what the market says. You got what they're trying not to say. You said whenever you were getting those interviews.
Right.
But also, what are they really saying? Where they're putting their money where their mouth is.
Okay.
And so the amount of money they're willing to pay for those options.
Right.
And that's what we're doing is we're saying how much premium is in the option, how much insurance is in the option. And we pulled that out, and that says, oh, the market's going to move this far today.
Okay.
And literally, that's where the numbers come from. They come purely from option numbers. So I pull the options, and that's cool. Sort of like a...
It's huge.
Yeah.
It's just sort of like if you go and you pull like a straddle, and you look at it for 30 days from now, and you look at the premium on both sides of the straddle, you get a pretty good idea how far the market's going to move over the next 30 days.
Right.
So that's sort of what we're doing on a daily basis.
Yeah, the people pricing those markets,
precise,
I guess, do the best job of course, assigning that value.
Well, the thing is, the people is everybody. Everybody who plays
the market.
Cool.
Right.
I know.
Right. I say the people, but actually, it's the market working in force. Exactly.
Yeah,
it's wild,
it's the market as a whole. It's not one guy's opinion. It's not a market maker's opinion. It's everybody.
Right. I mean, there's huge studies that they do in probability-based in terms of how, and I forget the exact terminology, but even talking about where they open up wagering for political
they've done some of those
contests and stuff, and the market is just spot on always because the money flows to where it needs to flow to assign that probability where, the probabilities.
And it's so hard to sometimes follow the market whenever it's moving and you think it's going to go to the moon or go all the way down or, whatever. But the one thing that the most accurate gauge, those options, which is just like you said, political wagers, all that stuff.
Yeah.
Like options reflect the now reality of how much pain everybody will take and won't take.
Okay.
And so that's why it's so accurate. It's just, it's everybody consensus. And it's not just a bobblehead on CNBC.
Yeah.
It's actually some guy putting down 10, 20, 100, $1 million on options. And is that too expensive or not to protect a position and things like that? So you just put all that together, and it's the best, call-in, number you can get to vote on how far it's going to go.
The moment that market gets away from equilibrium, some other investor will make the trade that brings it back to equilibrium.
Yeah, exactly. Or they'll start taking profits.
Cool.
Right.
Or they're going to, just cut their losses.
Right. No, there's so many variables. It's almost, we could talk about it the full hour.
And there's algorithms using the same thing,
right?
On when it's going to stop selling.
Yeah.
When it's start buying. So, because two deviations is what brokerages build risk models on. Two implied deviations, not standard but implied. And so, TD Ameritrade, all those guys, they're building it on two deviations because they don't think it'll go more than one most of the time.
Okay.
And so one deviation is what most algorithms are built on because that's the 70% or 68 point whatever percent of all days will fall in that day. And then 95% of days will fall within 2. So, so you really don't ever worry about it going outside of 2. And, 7 out of 10 are going to be inside this range. And so you can play that really to your advantage. I know I have one trader, Jeff, that, has been, working with me with the deviations, and he's doing fantastic. And he really is just waiting until markets move a deviation and a half. because then the probability of turning around is really high. And you just focus
that's cool.
It is.
Yeah.
And so when he's doing that, he's looking for obviously the counter trend bounce, and then how much would he give himself on like a stop if it's already down 1.5? Is he looking for maybe the second standard deviation? Where are you?
At the furthest, the second standard deviation, but probably even tighter than that. Yeah.
Okay.
And of course, the nice thing too is if you go and you look at, a lot of times you may max out a spread at that point, so you may not need a stop.
Okay, sure. Yeah.
So you can use different ways to
getting into a spread with a nice 5-to-1 risk reward or something.
Yeah, exactly.
Right. And like basically have you've moved 90% of the expected move on the day. The chance of it popping back up is pretty high. And right now, I mean, even just the other deviation levels, like 0.5 deviation. Okay, we've been sitting at that since 10:10. So for the last 8-9 minutes.
Okay.
Market's just been bouncing right off a 0.5 deviation level. So each one of these levels is where you should expect to have oscillation.
And folks, when we get back, I want to show you how you can test drive the trading tool that we're actually talking about, Darrell's scanner that has the deviations inside it. Darrell Martin, Tom O'Brien, appreciate you growling and prowling. You stay right there, folks. Dow's down $1.50, NASDAQ's down 44, S&Ps are off 10.5. We're going to break back. Welcome back, folks. Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us out here. Now, we've been talking about the deviation levels, folks. Darrell has an amazing tool to use in the market. You can use it in the whole market, actually. Bottom line is that in the NASDAQ market, it's phenomenal because you can trade right off it. It gives you the contract values. It's not going to tell you whether to go long or short. What it is going to do, however, is tell you what the best contract is as you are doing the strategy that you want to do. Now, you can come over to our website right at TFNN, test drive it right now, 30 days absolutely free. I'd suggest that you get the NASDAQ platform up first and get used to the contracts, you know what I mean? But each and every week, Darrell continues to work on this and make it better. It's pretty amazing, man.
I mean, you can see it visually,
Yeah, it's beautiful, man. Let's go to Mike in Dallas. Hey, Mike, what's going on?
Well, how are y'all doing? Darrell, listen, I'm a student of yours, but I found something interesting, and I wanted to share it with you. I see the deviations. They're on the charts. What I have been doing over the last 3 months is taking 50% of each of those deviations.
Okay.
And I put a line on my chart. When the market on an up penetrates that 50%, Darrell, I have it at 96% of the time it will go up to that next deviation level.
When it penetrates, between 50% of a deviation level, it'll go to the next level? Is that what you're saying?
Yeah. Yes.
Nice.
Yes.
That's pretty cool.
So,
yeah.
That helps you knock it out of the money, or I mean, there's a lot of ways you can trade that.
Absolutely. But I just wanted to tell you that I'd done an extra putting it in at 50%, and it really works well, of course, along with the volume and so forth. So, but
the expected volume with it, you basically look when it breaks through half that level, and then if there's expected volume exceeding half the level, it pops to the next level for you?
It does. And I have done this for the last 3 months, and on an up, it's at 96%, and on a down, it's 97.2%.
That's so cool, man. And folks, you know what you're hearing here, which is really cool. It's awesome what you're doing, Mike, because what I've seen happen, I remember when in the 90s when I was just trading Adobe a lot, and I was wondering, okay, if it goes this, if it does this. Because visually, when you actually do that in front of the screen, you can learn so much. And then statistically, you're putting it together, which is really cool, man.
Yeah,
do you know what I mean?
Feel for the market.
Yeah. You do. It's a great feel, man, that you have for the market.
You're actually starting to read the market.
Yeah, and it's you're there. And that's how you really find out, man. That's great information for us, Mike, man. Thanks so much, man.
Well,
so now I'm going to have to go back and pull that stat study myself, man. I'm all excited.
Are you always trading the same thing, Mike? What are you trading?
Well, I'm trading I'm trading NASDAQ. I'm a NASDAQ trader. Yeah.
Also, so right now, okay, so I'm looking at NASDAQ right now myself. We're down. We're 50% between 0.5 and 0.7. We're exceeding volume. So does that mean you're expecting it to hit 0.7? I mean, we're on a downside when you set upside. So that
yes. Except that we're let's see, we're at 50%. Yes, I believe it will go up to settlement.
Oh, okay, all the way back up. Okay, but what about like between 0.5 and 0.7? So are you using the 0.5 mark? Is that the one you're talking about?
I think he's saying 0.5 all the way to a 1. To a 1.
Okay, okay.
Right.
Yeah, so if I take it, once it penetrated the 50% between -7 and -1.
Okay, all right, got it. Okay.
It's going to go down, and it's going to hit at least -1 or below.
Okay, perfect.
Okay.
All right, well, that makes it really clean then. So basically, you're just looking for it to hit that 0.5 level. It penetrates that with exceeding volume, then you're going to go on down to 1.
Exactly.
And so that gives you a pretty decent distance, actually. We're targeting a good short trade or a good long trade on the upside.
Yeah.
And it
you
gives
get some good profit right there. It worked this morning, didn't it? Look at that, man. I mean, it came on down, it penetrated it, and boom, right there to 1 deviation.
It's going to work again right now, too.
Yeah, I know. I'm hoping it will. I'm watching. I'm like, let's go for round 2.
Totally.
So.
It just works so well because I've been a little bit lost when it just the market doesn't do anything, and I thought
when it's hanging out like at 0.3 and 0.2, and it's just like the market decided to take a break for the day.
Exactly. So I needed something that leads me into the market is going to go either above something or below something. So that 50% level between the numbers just worked perfectly for me. So just wanted you to know.
Good feedback, man.
That's great, man.
Okay.
Yeah. You stay right there, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. We want to hear what you are doing out there, folks. Our phone number is 877-927-6648. Dow's off $1.72. NASDAQ's down 50. S&Ps are up 18.5. We're going to be right back. Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. Dow right now is down $1.90. You get the NASDAQ off 61. S&Ps are down 15. We had our man Mike. He called just in time because that deviation that takes it off, and that NASDAQ is going right down into the lows again. It's down $45 right now, the NQs.
It's pretty cool.
I think we're going to hit a support level right there at 43.16, by the way.
43.16, okay.
Yeah, so we're just a few points off that. I might take a little bit of my profit on half my contracts right now. I have
That's
40
funny.
contracts.
Just intuitively, Darrell, I was saying, like, as this comes down to maybe 43.10, or, I'm just picking a random spot in that plunge down. But, I mean, that's where those numbers just intuitively make sense. We're sitting there talking about it, and, of course, that makes sense.
See the bounce right here? Like, let me move my scanner out of the way. But see this bounce? Sort of came in, bounced off of it, went up. So right here, this is where I'm looking at maybe having a little bit. We'll see. I mean, we're going down to 43.05 is what our target is. But I'm going to take a little bit of my profit right now and enjoy it. Well, if I even get a chance to, just keep flying.
Well, it's spiking. That's it. Yeah.
I mean, I'll take that all day. I mean, it can keep going in that direction.
The mentality. I mean, so look at that spread. That spread's completely dried up now so far. So we're talking about Darrell. My dad had put on. He had some of the spreads, a 10-point daily spread, 10.11 a.m. spread from 43.30 to 43.40. So as it was, it was just in the middle of that spread, not more than, I think you put it on at the beginning, before the show.
It's the second time I put it on, right.
But it was just right at that 43.35, the middle of it. And we happened to pull it up over the break, and I wasn't even sure of what spread he was in, and he says, all right, I'm in this spread.
And the spread's dried up.
It's just so that's what happened, yeah. And he had a buy already in there in place, and as it spiked down, his buy was taken out for over 80% of the spread, which we talked about.
Right.
83 cents on the dollar as it,
And it's the same spread that I did. It was I was only in it 12 minutes. I did it right before the open, and it was spiked. I took it, waited for the bounce, hit it again. Now, the thing that's intriguing about
you got it. I mean, for the chart, so it's so easy to see. Exactly. You got it here.
Yep.
Right? It came back up here somewhere, is that? And I'm guessing right before 10 o'clock.
Yep.
That's where you put it on.
Right.
You took a little heat. It was right back there. And then, of course, you get it out of it.
And folks, this is what's cool. So check this out. So I got the profit, used the profit to do the second trade. Now, the second trade, I didn't see it. It probably went down to zero because it bounced up to 43.60. Not zero, but do you know what I mean?
Right.
I was out of the money big time.
For sure, right.
Okay? And just give it 20 more minutes. Guess what? Back in the money, and that was it.
The market would have dried up on the other side, for sure. And now we're under it where the market dries up, so you can see how much,
And that's what's so cool about trading Nadex.
Yeah.
That is the essence right there, man.
Look at this spike, 43.10 here.
It's gonna blow out the lows.
Who would want to have a lot of money long over this market over the weekend? It's just scary when the market was 4% and you don't know.
Right.
I mean, you don't.
Right. I agree.
All right, so we're at half a deviation. Oh my goodness.
Here we go. Bye-bye. See ya. Don't want to be ya.
Yeehaw.
Yeah.
Man.
Look at that. They're down 60 now. Oh, I like it. Oh, my God.
That's a big one.
It's a huge one.
Yeah.
And you know what's wild here? The deal is this thing's only starting, man. You know,
And when I look at it, you know, I had put on trades even before Wednesday night.
Right.
And, you know, we came in and Thursday was a huge day. And I had taken them off early, which was fine.
Right.
So last night I didn't even put anything on though because I'm the same way. I mean, you know, I just want to see.
Bring up, I am closing out half of my.
Yeah, you can't go wrong after that move.
I'm at a deviation.
Taking profits.
That all up if I see the thing going up. I'm up over $1,000.
And see, this is what I mean. This is the mentality we're talking about right here. You know, Darrell's taking money. He's taking money off the table. He's not even getting out of a position. He's just taking profits.
Right.
He's not the only one.
Right. No, for sure. For sure.
I mean, we're literally sitting on the one deviation line. You know, I mean, like, come on. What else are you gonna do?
Yeah, and it just moved a 1.5% for the index in like the last half hour. I mean, that's seriously looking at, you know, just look at from 9 o'clock. We went from 43.50 down 50 points, up 60 points, and down 50 points again. That's 3 points, 3 percentage points of swing in with, you know, under an hour almost, hour and a half. That's, you just don't. You know,
these are completely dried out. Now, this is a really important, I think, point to bring up. A good lesson for everybody. Okay.
Yeah.
I was so just enjoying it, I wasn't paying attention. But anyway, so right here, look at what happens when you like just blow all the way through the spread. Okay. It's so deep in the money right now. All right, this spread that I have on is 43.30 by 43.40. We're down at like 43.02.
Yeah.
Okay. We're 30 points in the money on this spread. Like, it'd have to go 30 points against me at this point
right.
for me to lose on the trade.
It's funny, though, as we say that, keeping in mind it's just moved like 120 points in the last hour. But I hear you.
Know.
Right.
But it'd have to go that far against me to close out. If it's that far deep in the money, nobody's going to make a bid on it.
Right.
Or an offer on it. You know, they're going to offer the market.
It's a dried up market completely.
And so basically the market maker is going to throw a contract up there now and then, but I had 10 contracts on. Okay? So basically he throws one up, I take it. He throws one up, I take it. I'm getting out one at a time. Now, I'm not freaking out because if the market does come back up, and this is one thing I think is important, the market does come back up, okay, then there's going to become a bid and offer on that market again. All right, so I'll be able to get out if it starts flying back towards my position, okay? But right now I'm just able to leg out like one contract at a time as the market, basically every 2 minutes as the market throws another, the market maker throws another contract out there. But they are going to put it up for more than, this is big, more than the bid offer spread on the average contract. So if the bid offer spread is 4 ticks, okay?
Yeah.
Then 43.30, 43.30.4 is the best you're going to be able to sell for. You're never going to see one that's narrower than the bid offer spread, by a market maker at least.
Right.
Does that make sense? So if they
it
default,
does. No, there's always going to be a 4-point spread from the bid to the offer, so the offer can't exist.
People go in and go, I'm going to get out at 430.1. Well, only if another trader is willing to take a loss on the trade, because they're going to lose after fees.
Yeah.
If they do that trade.
Right.
The market maker at least makes a couple bucks on the trade if they put it up, and they're now I'm at 5. They're contractually obligated to put up at least one contract. Okay, they're allowed to have a pause if there's, you know, if it's way out of the money or whatever.
Sure.
But they have to put up at least like a contract.
I didn't know that. Okay.
Yeah.
Interesting.
Now, they only have to put it up to the bid offer spread. So they only have to put up a buy. They don't have to put up a sell because the buy is capping out the bid offer spread at 430.4.
And the sell is underneath almost a dead market, right?
Right. Basically, you can't put an order at the, you know, at the floor ceiling.
Right.
There's a Z profit on one side or the other. So logically, it just doesn't make sense. And now I'm at 4. So either getting taken out, and then it's first in, first fill. So if somebody else put in a 430.4 right now, they couldn't get filled. Okay?
Right.
So until I got all mine filled.
And the way you're thinking about it is your capital's tied up and you can't get out at the fair value of that trade.
Exactly.
Right.
Yeah. So the wiser thing to do is to go in and actually put that, if you know that 430.4 is when it's going to drop off, what I always do is, what I normally do, talking on the show, but I go and put like 430.6, okay?
Sure.
And now I may get out before then, but just to have an order there, so if it basically flies to maximum profit, I don't have to hang out. And yeah, see, it's coming back up. You know what? Who cares? I'm just taking my profit.
Yeah.
That's good.
I mean, it's too funny. That's all. There. That's going to be a trend today, and not just on this show. I'm taking my profit.
Yeah.
You know?
Right, and there's no in a market like this, folks. You can keep getting. I mean, this is a day trader's dream. That's what it's coming down to. It's.
And so I got 3 left. See, they're getting filled just one at a time. Boom. You can't even tell. It's so fast. But I got 3 left on there. But so if you're not going to set a take profit, meaning you're going to watch the trade or you're just going to leave it or whatever it is you're going to do, okay, then set your take profit at like $6. I know you're giving up a little because if it goes to expiration, you know, I only got 17 minutes. I could decide at this point if I wanted to just cancel that and, you know, grab remaining $4. I mean, come on. I mean, who cares about the last $4 to $6?
Right, and then you have to you have $96 at risk for that $4, and your capital's tied.
I've made $568.
And all we've been talking about is those moves. I mean, this could definitely make it to 43.40 by 11 o'clock. It's not even.
I think on all 10, I think I made like 700 on it. So I mean, I'm up 1,700. I don't care about $4.
Right.
No.
So I set my take profit at 6 ticks from the floor or ceiling on that trade. Okay, basically what it is whatever the bid offer spread is plus 2 ticks. So if the bid offer spread is 4, then I'm going to put it at 430.6.
Okay.
And that way, while there's still liquidity, I can get out of all my contracts at once. Because when it gets to the point where there's no more bid and offer both,
yes,
then the liquidity drops to like 1.
Yeah, the market maker is only going to make a market when he can make both sides of it.
Right.
Exactly. So he's just going to throw a contract up when he can't make both sides. So I want to get out right before he can't make both sides.
Oh, this is good information, man.
And I do the same thing on binaries. If the binary's 4 wide or 10 wide or 14 wide, whatever it is.
Okay.
You know, I'm thinking it wide. You know, let's say I'm buying a 10 or a 20. You know, we'll do some of those out of the monies, have some fun with them, right?
Yeah.
Let's say it's 10 wide. Just, you know, number I don't like, but let's just say it is that wide.
Okay.
Then I'm going to get out at 88. So I'm going to get out of the width plus $2 because it moves fast.
Yeah,
so I'm going to give myself a little room right there.
10
so
spread plus
if I buy like a
whatever the spread is.
I want to get out.
I got it. Okay.
I don't want to get out at 95 or 98 because I'm not going to get out. And my order's just going to be sitting there unless some other trader takes it.
Yeah.
But I know the market maker will take it like at 90, but they'll take all of them like at 88.
Right.
So that's basically
imagine that little bit of money too is a huge amount of money because
especially because it's 10:45 in the morning. I mean, for it to be tied up all day in a daily spread. You know, this one's 11 in the morning, Darrell, but I'm sure there's plenty of daily spreads right now that are completely dried up in the same way.
Exactly.
Yeah, with how far the market's moved, for sure.
And so they're way down there. You know, I got 1 contract left now. We had 10, so we've been like literally just working our way out of this thing, and it starts flying back up. And I mean, it still has 20 points to go. And again, the one comfort I have, which is good and bad, okay, is if it goes against my position, which I'm 20 point now. Now I got them all. So, but if it goes against my position, then a bid offer will come into place, and I'll be able to get out. Okay.
Right. It's just kind of a capital being tied up.
Why wait for you know? I could have. What if that was my capital? Okay. I mean, I only did 20, but I mean, some people like that may be all.
Of course.
Capital, and then all of a sudden, let's say I wanted to buy on this bounce or something. You know, well then my capital's tied up, and now I have cost of opportunity because I'm worried about $4 or
opportunity
$6.
Cost is a big deal.
Huge.
In a lot of things in trading, you know, but it is. People don't think about it. What opportunity did you lose by that?
That's right. That's right. No doubt.
But check that out, man. We went down, and Mike, you know, got to give a big shout out to Mike, right? He called it. It broke through the 0.5.
Yeah, that was kind of convenient. That was awesome. What a call to get as it's passing the 0.5.
And I was really cheering that position on, considering I was in all those contracts. I'm like, yeah, okay, I'm with you. Let's all say that. It goes on down, it hits it, but look where it is now. It's just oscillating right there at that 1 deviation line, that blue line at the bottom there. It's oscillating right there, and we expect it to oscillate right around that point. That's why I was like, I'm taking off half now, and it came down. I'm like, just in case we get one of these like thunder falls and the thing goes down to 2 deviations.
Yeah.
But then it came back up and it hit that 1 deviation. I'm like, I'm done, and so I took half off. Yeah.
And you hear, I mean, Darrell's taking both sides of what can happen. That's it's like it can pop right back up. You go, oh, but I have trades on where it can pop right back down. You know, you can't
and
just
in a day like today. That's
what
perfect.
it is.
Because you're not talking all day. You're talking about half hour, an hour.
Right now, right?
Yeah. And that's one thing that I've tried to work with some traders on is like I don't have an expectation. Like I have obviously you have a little bit of expectation because you're hitting a button, right, to go one way or the other.
Sure.
But I try to always play out every scenario in my head because it keeps me more balanced. I'm like, okay, so if it hits here and it goes long, what am I going to look for to say it's going long? If it hits here and it's going to go down, what am I going to look for to confirm that short?
And that's the hardest part,
and
especially once you
do that.
And he's a strategy expert. That's
the hardest part.
Yeah,
and
it is the hardest part.
Especially once you get a trade on.
Exactly.
Being the unbiased. I mean, bias is like you can't help but try and rationalize that you're right in the trade you just made.
Right.
And it's so important just to look at things like we always talk about. Would you make that trade right now?
Right.
Right. I try to go like new trade. Like I'm in a trade. I can't do anything about that besides close it. Okay?
Right.
So, instead of taking
you're right here. It doesn't matter. What's it worth right now?
Exactly.
Right. So I go, okay, what's my next trade? When would I buy? When would I sell? And what that does is it tells me, okay, so if this happens, I need to take profit. If this happens, I need to go ahead and look at, maybe adding on to the position or, at least trailing my stop,
right.
Whatever. And like I'm like, well, hit what's one deviation, I expect a bounce or oscillation. So what do? I'm going to take half. But it might keep going. We have a lot of volume. So I'm going to leave half of that on there. And then as it pulls on back up, then I'm going to go from there and go, okay, now what I need to do. And it just oscillated. I mean, all I'll be doing is throwing money away right now, just letting it sit right there. So,
opportunity cost. Get your cash.
I mean, I could have made a few more points on it, but I mean, I had 6 hours of premium sitting in that thing. And
right. I mean,
if I want to do another short trade, I'm ready for it. But I think right now we're going to oscillate between this and that low that we just set at 42.95. And I don't see a whole lot happening. If it busts through that, I'll be ready for looking for another short, probably on a 2-hour contract, just because
That's right. No, and that's what happens, folks. And this is important to understand. The contracts keep coming up. You go to the new contracts because
You can just There's so many different ways to play it.
Here we go. Whack that baby. Whack 'em all.
See, I know.
There it goes.
You gotta love.
Right down. Got that little support level, so we're gonna see if we stay on that support level from where we bounced.
4,300. Here we are.
Yeah, it's gonna. I think it's gonna rip it apart.
You think it's gonna rip it apart?
I do.
Oh, that's amazing.
I'm so surprised.
That's amazing.
First time for everything. Always go down.
You guys are killing me.
If there's ever a chance, man, today, I mean, is like.
Yeah.
Oof.
This is it.
It's at these moments where, people's emotions can take the best of them, and that's where accelerations can happen. We're all human. It's the person managing $100 million. It's just like you or us taking profits and losses. And
he's a lot more nervous than I am.
Right, exactly. Exactly.
Tom O'Brien, Darrell Martin, Tom O'Brien. You stay right there, folks. We'll be coming right back. Dow's down 230, NASDAQ's off 81, S&P's are down 67. We're going to be right back. Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. Don't forget, folks, every trading a day we start at live program, 8 o'clock in the morning. John Logan kicks us up. We go to 6 in the evening. Darrell's got a great show Wednesdays, Thursdays. We do this show on Fridays. You can test drive the Nadex platform. It's free. Coming over to our website at TFNN, just hit the banner. They'll bring up $25,000 of paper money. And make sure that you do listen to Darrell, because you can see the strategies that are set up. I was just going to say the volatility is what you really want to see for the demo account, how the market affects the premiums.
Yeah.
And so with this type of movement, even if you're not even trading in the demo account, just pulling up the spreads. We were just talking about, Darrell, off on the commercial break, the 10-point spread that you guys were both in, and that I was even in too. So it's 43.30 to 43.40. And you would have been able to see that spread dry up on both sides of the market, from the downside to the positive side within an hour, and then almost come back again and dry up. So, I mean, you can see exactly how that premium is priced in, which is basically what you want to be playing with,
which is so cool,
and learning.
Yeah.
Because, you know how to trade, it works. But these are premium-based option-type products where the premium, and that's what you intuitively just pick up. Where you can get...
And the other big thing I think to highlight, some people I think get confused about this, is you go in and take your profit based on the chart.
Yeah.
And like if
we
you're
had this
a normal
discussion
option
last
trader,
week when you weren't here, yeah.
Yeah, we're talking about that because, when people are trading Apple options, okay?
Yes.
They're not looking at the Apple call option chart to decide when to take profit.
Right.
They're looking at the chart itself.
Yes.
Right? And, they may be looking at the pricing, to make sure it's hitting it, whatever, but they're definitely looking at the chart. And so that's one thing I just stress with people, don't get all concerned about the proximity and the premium and where everything's at. I mean, know it so you understand what's going on and why it's moving, how it's moving.
Yes.
But, when it hit that one deviation, I didn't go... You know what? I still have 4 points of premium left in my contract, and I'm way below the market, so I'm just going to sit there.
Okay.
I'm like, no, I'm going to take my $1,000 and I'm going to call it a day.
Right.
And enjoy it. You know, so I'm not going to worry about the options price. I mean, if you're worried about it after you're in, it's too late.
And that's because you might not assign the right value of the premium. And so most of your trading, methodology is based off what you think the underlying index instrument's going to do.
Yes,
so exactly. It should be. So trade what you see, not what you think. I mean, we hear that from
you'd say, I want to get out of this option at maybe like 60 cents on the dollar.
Okay.
And maybe you think that's going to be where the underlying index is at a certain point, but maybe you assign the wrong premium, and the index gets to exactly where you think it is, and you're like, you know what, I'm going to hold out for that price on the option though. That makes no sense.
People do it because the premium goes up and down. Yeah, that's so cool.
You know, you're
the volatility. That just changes it. Yeah.
Exactly.
I heard you guys last week. You had a good show, man.
Yeah, you were listening. Darrell, he was using the Bloomberg listening to the show.
Yeah, well, guys, check this out. Bridget and I were laughing like crazy because I had the Bloomberg up, and she says, "Yep, he's got the Bloomberg."
That one wasn't a hard one to call.
I can't use it because my dad has it.
Bingo.
That was so funny.
It was perfect.
That was.
But even like showing this position we took, because I really want people to get this down.
Yes.
We came down, and the floor was 43.35. Okay.
Yeah.
So technically, we're at maximum profit. We're sitting down here at 4,300.
No, sorry, the floor was 43.30.
For us, it was 43.30, but you had the 35.
Oh, he had 35.
Okay. I had 10 of the 43.30, 43.40s, and I had
you
10
had both. Okay.
Yeah. And so I got it up right here at the live position.
I see it. Yep.
Yeah.
And so, but the floor is 43.30 or 35. Doesn't matter which one. But notice the 35 I had, it was an end of day. Okay.
Yeah.
And probably wasn't the best selection of the contract for me, but still, turned out well.
No.
And anyway, but like right here, the average, the market price is 43.39.
Darrell, we got to run. It's the commercial. I had the same exact spreads as well. I had the 43.30 floor, and I did the same thing. I got out of them at the commercial break.
Yep.
That's the way to do it. It is.
I love it.